Hello everyone, welcome to video number 7. This is following the range of the weekly range. We're going to focus on a smaller range for day trading. So once the 1 hour delivery is confirmed, we're going to head down to the 5 minute and we're going to find the range that we focus on for the day that will give us directional bias. It can give us trades, everything that we know and love. So if we're basing it off of today, the time of this recording, and we know that this is a retracement. We have higher targets up here. We've been confirmed bullish, or at least short-term bullish. Then we can go down to the 5 minute and figure out what we want to see. This range here is called the overnight session. So this is like a price discovery range, basically where the daily delivery is getting formed, where it's giving us hints as to what may happen through the day. And we're going to understand how to read this very well because it helps a ton. So today, we look back at the range just like we do the weekly. So we want to know where we're entering or where we're opening in the range. If we are premium, discount, where we're at in reference to the equilibrium, to the high, the low, same stuff as the weekly. So that does not change, but we focus on this range. So if we determine that we were bullish and we were looking to get up to at least the equilibrium of the previous week, then we need to know what we want to see from the overnight session. There's a couple things that will give us bullish delivery. As usual, we're going to use our fractal that we're going to know and love. So this is essentially an accumulation. When we take the low, order of delivery says sell side to then go higher. So one of the highest probability trade ideas you're going to get from the overnight session is when we take the low or the high, depending on the delivery, we close back inside, and then we usually trade to the equilibrium at least, and then to the other side. So we can call this a profile 1. Here, it sets it up pretty nicely. We don't really get a retracement in here on this time frame. On the lower time frame, we do. But since I'm bullish in the 1 hour, I have my targets above, and we take the low of overnight session. I want to see how we're going to trade after we take the low. We close back inside. We target the other side. Inside of here, we've got imbalances to focus on. We've got liquidity. Everything here sets us up for a run higher. Because the overnight session ends before 8:30 when the market opens, us being down here and leaving all this before manipulation comes in the market at 8:30 gives a pretty good indication of what's being set up for the day. This is set up for a large run higher, just like we saw on the 1 hour, where these are 1 hour failure swings. So we can expect speed through these levels. And then we watch how we're trading at the equilibrium and then at the high. As you can see, we close above the high. We use the high for support, and then we continue on our journey up. Then we just have to follow our order flow. Expansion, key levels, OGC right here, wicking, we're still buying, and then we continue up. The key levels from the day before are going to be important as well. We will reference previous day's overnight session, so it's always good to look back to that to see if there's anywhere inside of here that we could possibly key off of as well. We've got OG key level right here that our order block forms right on. So this is looking inside here. Here, you can see that when we open when the overnight session closes at 8:15 and we open at 8:30, we're failing to close above or below this range, and we're trading in the center. Trading in the center of the range is risky because in order for the delivery to move, we need sell side or buy side taken first. So you need to really be careful inside of this overnight session range when we're failing to move above or below it. So when we wait to see, okay, now we're taking the low, order of delivery says we need a range or an accumulation, sell side, and then we close back inside, changing the state of delivery back to bullish after we took sell side, which is a great entry, and it's part of the models that we're teaching. So entering here to then take us above here is great. And then we can just follow the order of delivery through the day. Accumulation, sell side, buy side, retracement, and then expansion. As you can see, the retracement comes back to algorithmic key level, which is going to be 8:15, which is the close of the overnight session. And the equilibrium of the overnight session is right there as well. So these are algorithmic references that we can play off of. So once we are failing to close back below here, we have these algorithmic references. We've got this gap, failure swing, order block created on the failure swing. We can enter in there to then take out this high. Once we get good, we can also sell retracement fractals by looking at the same order of delivery, because this bookmaking fractal is how the market moves. It's going to be a piece of retracements, expansions. It's going to be inside accumulations. You're going to see it all over the place. Next one, we take the low. We're opening in a premium end. So if we're bullish for the day, or if we're expecting a reversal possibly, we still need to take the low first. So order of delivery from here says, I'm not doing anything until we can close back above. Now we have an expansion, a retracement, and an expansion. Same key delivery. We're using overnight session as a reference. This is a tight range, which tells me this is my accumulation. So accumulation, manipulation, expansion, retracement, and then expansion. Once we close above the equilibrium of overnight session, you can see that we're wicking without closing, just telling me this level is being respected and the bullish bias can continue. Our other key levels, 4 a.m., 8:15, the high of ONS, all of these are being respected as well to the upside. So if these are acting as support, that means my bullish fractal is still in play. So adversely, when we don't take the high or the low, we're going to be coming from higher time frame fractals. The 5-minute is just giving us our confirmations. So after we open here and we trade lower and we fail to close below, then we trade back up. The equilibrium becomes extremely important. Our key levels as well, supporting a bearish bias by not allowing any candles to close above the equilibrium or above these key levels. So this is telling me we're not expanding to the upside. We're inside of a gap. We're at these key levels. I know that if we can't close above them, that means we're probably continuing in the same direction. So then we can sell from there. And as you can see, it tanks. So that's why we always reference the high, low, and the equilibrium. Here, accumulation, manipulation. We close back inside. we're using the low as a reference, and we also have our key level, failing to close below. Anytime entering in here to then get above the high, it's a great trade. If we're not expanding through here and we start breaking back down, that's when we can either wait or we can start taking trades in the opposite direction. But a key note to this is if we are staying inside of ONS all day, that means it's a seek and destroy profile, and we are going to need to be cautious when you're trading inside of this profile. If you're expecting every time you trade to expand above a high or low, you may get caught up. So trade accordingly, take your profits quickly, and then we're moving from premium to discount in these zones. But the key is to get used to the deliveries around this overnight session. This is another example of us going one way. We've got our key levels. We trade down, fail to close and expand below. As we come back up, we can't get back above the equilibrium. We're hitting our key levels, and that's an indication that we may need to continue selling because of the side it's respecting. Here, we're starting at a premium end of the zone. We're clearly bullish. We've got a lot of imbalances and different things down here, but as you can see, we trade right down to the equilibrium. We cannot close below it. We resume order flow to the upside. Reactions here tell me that this high needs to go. Another example here. Start with the high. Trades right back down to the equilibrium. Order flow confirmed. And then we can buy to take out this high and continue that expansion. Once you look at these key levels quite a bit, you're going to see how we react to these algorithmic key levels as well. Once we reference them, we read them the same way. Do we want it to act as support or resistance? And then we just enter. We're going to be going over entry, stop loss, trade management in the next video. But for these, you just need to get used to reading what's happening. So here, we're trading lower, imbalances here, take the low, close back inside. We continuously close above the equilibrium. So this is just a small accumulation inside here, but we never take this low. So the bullish bias is still in play. And then eventually we take the high. So here we trade, but we never take the low. If you're nimble, you can get a buy around here if we're using our key levels because we're still looking left. Imbalances, you've got failure swings here. Ideally, you want it to take this low to then take that high. Since we don't and we expand, then we can wait till we see what we're doing at the high. At the high here, we have same type of fractal. We take the high, sell fractal, TP at the equilibrium, and then we can see if we take the low, which we don't do till the next day. So we probably wouldn't still be in that trade, but this is a lot of movement, and that's all you really need. This is all framing and basing off of this range, and you'll continuously see how we respect it. Here, accumulation, trade down. Again, we've got key levels inside of here that we can look at. Doesn't take the low, but it's giving us the direction that we need based off of our key level. Order flow resumed, expansion, retracement, retrace right to the high of this range, and then we continue. This is just, we're in a hurry. This will happen, but there's nothing to get worried about because once we're expanding through here, nothing's giving us anything to go off of bullish. So it's not like we'll be getting lost inside of this price action. We traded right off of our key level, respecting the equilibrium, and then apparently we just needed to move fast. You can see here, this is the start of a week. So when we've got a key level down here like this, you can see the delivery, and then we do get a little retracement in there. So higher time frame key levels, playing with our overnight session. For your homework with this stuff, make sure you're going through your charts, um, throwing this overnight session on, and then seeing the reactions around it because you need to trust it. I see it and I know what's happening, but if you're going to read it during the day and to see, stay calm with it, you're going to need to be really focused on what's going on. And again, the main things are the high, the low, the equilibrium, how we're trading around there, and then just looking for the key levels inside here that you can frame a buy or a sell off of. So let me just type it out. The range is 4 a.m. to 8:15 CST. That's the overnight session range. Key levels inside and around it are the open, so 4 a.m., the close, 8:15, 8 a.m., and 2 a.m. Those are our higher time frame hourly starts. So those are always going to be referenced. So those four algorithmic time frames are going to give you good perspective and some trades through the day. But we trade the delivery first and what should happen. So we take the high, we close back inside. Now I understand I have a fractal. Now I want to see how we're trading at these key levels. They are respecting and acting as resistance. So that's in line with our retracement bias to come at least to the equilibrium. And these trades are usually really nice. So that's the overnight session, and we'll see you in the next one.